What up, HyperChange? Welcome to another episode. Today we're going to do a quick recap of Snap's first quarterly report as a public company. It came out a couple days ago. The stock got creamed. They missed our daily active user target that we put in the earnings preview, and Wall Street didn't like the numbers either. The revenue estimate of 158 million was not met either. They only reported about 149, 150 million, so light on revenue, light on users. People are worried that Instagram is in fact eating their lunch. So let's dive into the quarter, see what really happened. Quarterly daily active users. So they came in at 166 million, below my estimate of 170 million. This was representative of growth of about 36% year over year. Remember, I think to please the market, they need to keep user growth above 40% this year. That is what I wanted to see, but that really doesn't look like it's going to happen. I think we're going to continue to decelerate. Now that we're below 40, it's really going to be hard to bump up this growth rate. And that being said, like, this isn't, it could have been much worse. Like, it could have been much, much worse. I don't think this is actually a bad number at all. They added 8 million net new daily active users this quarter. In Q4, they only added 5 million. So they're actually accelerating the aggregate amount of users they're adding. So the Instagram threat isn't 100% killing Snap. Like, that's been debunked. So I think that's actually a good thing. You know, their user growth looked, consistent in North America, strong in Europe. Rest of world, which has really been lagging, ticked up a little bit, but I still don't understand why their rest of world growth is so far behind, given the whole thesis of on the earnings call, like, oh, we're getting much better at Android. Don't get why the rest of world is doing so slow, and I think that's a bad sign. And the argument that it's just because they don't have bandwidth makes no sense, because the rate of the bandwidth in these developed countries is increasing exponentially, so you think their user growth there would be too. Quarterly revenue by geography, nothing too surprising here. Basically, we're just looking at the breakdown. I think clearly the trend here is the revenue stopped growing. Every single quarter that we have data on, Snap posted higher revenue. This quarter, they didn't. Revenue came at 150 million. That's a decline from 166 million in Q4. And they are saying that a lot of this is due to seasonality. The advertising business is always incredibly strong in Q4 and then drops off and is its weakest in Q1. So that's why you have to look at it compared to the first quarter of the last year to really get that fair comparison. But I still think it's interesting to note that this is the first time we've seen Snap's quarterly revenue decline sequentially. ARPU, average revenue per user, decline in the quarter. Another thing that we haven't seen decline from Snap that now declines. This, once again, they're blaming on the seasonality of advertising business is stronger in Q4, down Q1. Okay. Rest of world, ARPU increased. I don't know. Maybe they're showing the rest of world people way too many ads, and that's why they're not growing as much there. Who knows? Cost of revenue. This is what's killing me here. Okay, so first of all, they're excluding stock-based compensation from cost of revenue, which is bullshit. I'm sorry. A bunch of other companies do this too, but like, if you're paying an employee in stock and that's a bulk of his motivation to work there, and it's an expense that shareholders have to accept in the form of dilution, then sorry, that's an expense you should be including. And that's why, even though I'm showing you like their fancy slides that show the numbers they want you to see, I'm going to dive into 10Q and we're going to look at this later because, I don't like this slide. Interesting to note that hosting costs are decreasing. Hosting costs per daily active user, they said are decreasing, but now that I look at it, I'm like, oh wait, okay, so they're decreasing from Q4, but if we're buying the seasonality business and I look at the year over year comp, Q1, that 60 cents hosting cost per daily active user is actually higher than Q1 2016. So your hosting cost per user year over year, adjusting for seasonality, is increasing, even though they're saying, oh, lower contract pricing and infrastructure efficiency programs more than offset cost increases from more users and growing engagement. No, because you're adjusting per user. The metric is literally hosting cost per daily active user. So an increase in daily active users shouldn't be the reason. Like, I don't know. Not buying all these metrics here, but I think their hosting cost is a mega issue, and it's a reason why their cost structure is way higher than Facebook or Twitter's, and I think something that's going to kill their valuation in the long term from a price sales basis when they're comped to those other social networks that just are selling ads far more profitably. Operating expenses, guys, first of all, they're excluding stock-based compensation from here too. BS. Man. Research and development costs are skyrocketing, like quadrupling almost year over year. Same with sales and marketing. Same with G&A is tripling. Like, your operating expenses are growing just as fast as your revenue. We're not seeing any economies of scale here yet. Maybe they still need to hire out the wazoo to build what they want. But Snap's cost structure is grinding me the wrong way. Like, they need to get way more than $1 billion in revenue to actually start making money. That's my concern. Look at the free cash flow. They're burning more than ever. 173 million in the quarter. Definitely not ideal. They do have a massive cash cushion though, so this isn't really a problem right now, but interesting to note, this business is burning a lot of dollars. Revenue for the quarter up 285% year over year from 39 million to 150 million. Much lower than my personal estimate. I thought Wall Street was already lowballing them with 158 million because I just felt like, I don't know, they're just so early in their business model of monetization. I felt like we still should be seeing a sequential ramp from Snap. Now, this is a total guess by me, but like, that's what I would have wanted to see. And so this decline in revenue it's just lackluster. 285% sounds really good, but you were so early in monetizing Q1 last year that I don't think it's really fair. Cost of revenue, this is all something that kills me. And now a bunch of these expenses look a lot higher than they actually are on a normalized basis because given the fact that they IPO'd, they have to like write down all these restricted stock units as an expense this quarter, even though they're actually going to happen over years and they're not going to be on the income statement next quarter. And they're really just a one-time thing. So this happens when every company IPOs. So we're really going to get a real strong gauge of what Snap's operating model is looking forward. We're going to need to wait till next quarter when like this whole thing is kind of back to normalization. But all those people was like, oh my God, Snap's G&A expense went from, 24 million to 1.1 billion. That caused their loss to go from 103 million to 2.3 billion or 2.2 billion in the quarter. Like, no, they did not lose 2.2 billion this quarter. It's because they're expensing all of years and years worth of stock in this one quarter and aggregating it. It's what they do when they IPO. Don't get confused and think like Snap's definitely not profitable and their income statement would look bad. But this quarter, it's skewed because of this weird IPO thing. Keep that in mind. Cash, if you add up the marketable securities and cash equivalents on the balance sheet, we're looking at about 3.2 bill, up significantly from only $1 billion at the end of the year. This is all because they raised it in the mega IPO. But this is going to be a very interesting number to watch. Snap is going to be burning through this quickly. Will they need to raise more eventually? When? These are all going to be questions that are coming on investors' minds in the next 6 to 9 months as they keep burning a ton of money. I would watch Snap's cash pile very closely if I was an investor because they're not making money and they're going to need to rely on the capital markets at some point in the future unless they get profitable really quickly. Interesting to know. And I guess if you annualize, they're like $175 million to $200 million quarterly burn that they're at right now. Let's just call it 200 to be a little conservative. That's $800 million a year. So they still have about 3 to 4 years of cash burn at the current rate. So that's why it's all dependent on like, okay, if they increase cash burn, that 3 to 4 years could quickly shrink. Or if they decrease cash burn and start to get profitable, then they'll probably never need to raise money again unless they want to do a big acquisition or something. So it's very early. We'll have to see how their cash balance trends. User engagement. Snapchat defines its user base differently than every other social networking company. I think this is fascinating, and I think they're holding themselves to a higher standard, which is excellent. Facebook and Twitter use a metric called monthly active users, which is the industry norm for like engagement on social, how many people logged in each month, the average of that, there's your MAU, monthly active users. Snapchat uses DAU, daily active users. This is defined as a registered Snapchat users who opens the Snapchat application at least once a day during a 24-hour period. And then to get that number, they average up the amount of people who logged in each day during the quarter. During the quarter, on an average day in Q1, 166 million people logged in. That's a lot. That's like a couple percent of the entire Earth's population is checking Snap every day on average, and that's going up. Let's like, I don't know. I think it's awesome that Snap holds themselves to a higher standard with this number, but the flip side of that is there's a reason why Facebook and Twitter didn't, because they knew once the daily active user numbers weren't as beautiful as they were when they IPO'd, that Wall Street was going to get their hands dirty and like grill them on that. So we'll see if this comes back to bite Snap in the ass, that they are giving a little away, maybe too much data. This is the chart that says it all. If you look here, and the graphic was really crappy quality in the filing, it's not me, but you can see that the growth rate is the lowest ever. It looks like the trend is like kind of a consistent uptrend in users, but then if you look at it of like the year-over-year growth rate, the derivative, we're slowing down dramatically. In Q1 2016, users were up 52%, this year 36%, so like kind of a consistent linear downtrend. This is a breakdown of the geographies. Once again, the fact that rest of world is kind of lagging, even though I think there should be an acceleration in the addressable market in those regions, makes no sense to me, and I think is concerning and probably due more to competition than bandwidth issues. Cost, okay. So we're diving into cost revenue. So remember I said in the preview that they need to get their gross margin positive. We saw an inkling of that in Q4. Now that, yeah, it's not positive this quarter, but remember that's because they have these weird restricted stock units lurking all over their income statement that are not actually necessary to their core business. So they're telling you here about 19.6 million, primarily due to restricted stock. So out of the 163 million, 20 million of it was stock expenses, and the bulk of that 20 million was this one time, but not all of it. Some of that 20 million was like consistently reoccurring stock-based expenses that I think should be included. So we assume that 15 of that 20 million was this one-time IPO expense and 5 wasn't, then we actually get a $15 million decrease in their cost of revenue to normalize it. We're looking at about 148 million, which is almost exactly their revenue. So gross margin on an adjusted basis, based on my understanding, looks like a goose egg of 0. And remember, like, this is gross margin. Like, this is the money that they get after they sell you the ad. Snapchat is not making money on its ads. They make $0 when they sell you an ad, and that's before they've paid anyone at their company. This needs to change. Fundamentally, like, they need to change this business model, get way bigger and have way more scale, or they are just not going to be a profitable business. And like, diving into this, if you look at the risk factors, this expense growth will continue as we broaden our user base, as users increase the number of connections and amount of content they consume and share, as we develop and implement new product features that require more computing infrastructure. So what they're telling you here is this is not going to slow down. The more people check the app, the more people play with the app, the more costs they have. This is a really concerning business model because it looks like their hosting costs are scaling with users and engagement. I don't see how this results in a really profitable business model in the long term if they keep having to pay more when you use the app more. Like, there's just no way when are they turning out profit? This kind of freaks me out, and I just don't understand how they're gonna fix it. Anyway, that's it. Snapchat Q1 recap. Stoked to see what happens in Q2. Like, this is one of the most exciting tech IPOs out right now. I think everybody should be watching it, learning as a case study. Evan Spiegel, I was very impressed by some of his answers on the conference call. I think he could be a visionary, an incredible CEO. He's really young, so we'll see what happens. Zuckerberg's coming for his throat, but I think he's got a chance. Anyway, that's it. HyperChange. See you guys next time. Peace. Happy snapping.